I thank you for attending. Today's webinar is Dynamics GP Closing. My name is David Caldwell. I appreciate you coming and wanting to learn a little more about Dynamics GP Closing. I am going to go through a PowerPoint presentation here that's really going to highlight much of what you do need to keep in mind for GP Closing. We will go into GP to visit some of the menu selections here to kind of further acquaint you with some of the things that I'm mentioning along the way. So the first thing is that I want to talk a little bit about things that you need to keep in mind for closing. So we'll first start off talking about tips on closing your system. So one of the things that I'd like for you all to really consider, if you have not already, is to be accustomed with Customer Source. And Customer Source is Microsoft's avenue for you to getting more information, questions answered about the product that you are using. And it's a good way for you to look up some of the same kind of support messages that we look up in case we need to, as consultants, to get answers to questions to helping you. But there are an awful lot of additional items that are on Customer Source that give you some other URLs to get white paper documents and to do some of your own research into an area that you may want to know a little bit about. So if you've not signed up for Customer Source, you want to get back in touch with us and just let us know that you need some help to getting aligned with that. But I can't say enough about that. If you've not visited, you really do need to get signed up. All right, so for those of you who might be payroll users, this bullet point is having to do with payroll tax tables. One of the things is not to wait to the very last minute to download payroll tax tables and as well as payroll tax updates that come along. Payroll is probably one of the most heavy-weighted type of closings inside of the GP system, mainly because that there's generally changes to payroll for the following year, particularly having to do with W-2s, particularly having to do with the 941, and just making sure that you're in compliance with payroll rules having to do with the IRS and the state and whatever locality that you may be in. So just make sure that you're keeping that in mind. I'll touch on payroll today, but there's also other modules, but we'll also keep that included along the way. One of the things I think is important is to plan your closing. And that, I think, above anything else and above my bullet points that I have here, is that you really do need to get together with your accounting group to talk to them about your plans in closing and what methods that you're going to be using to making that close go smoothly. I think there is probably one place in the system that I personally would prefer most users being out of the system while one being in charge of closing would be the general ledger closing of the year. That one is something is more of a throwback for me personally since I got started back in the early 90s with GP that I've been hold true to and I think works well. But there's nothing that's documented in Microsoft saying that you have to make sure all other users are out of the system at the GP closing. But in other parts of the system, you can certainly close with having other users in the system. It's probably better that they're not transacting at the time of closing, so keep that in mind. So you're going to develop a plan, and it really should be with your accounting group because it does include everyone. Perhaps even those outside of your circle need to know what your plans are because it could mean that you're going to hold off on some reporting until you complete the process. You need to have a contingency plan. That is, if for some reason that you might close something out in GP and you prefer that maybe you shouldn't have done that, or maybe the timing was off, or for whatever reason is that your well-intentioned plan was too early, or something might have gone wrong. So the contingency plan is what if. What if we lose connection? Do we have a good backup to go to? What if, for some reason, maybe perhaps we shouldn't have closed out when, and we needed some extra time in order to close, and we do have some additional data before we actually close. What are we going to do in a case like that, and how are we going to proceed further? You want to perform the closings at an appropriate time. Generally speaking, General Ledger is one of the last modules in the closing process, and mainly because folks are looking at, particularly if they're in a calendar year, are looking at closing and want to make sure that they have all the entries made into the general ledger system before they close. You can literally close general ledger about any time that you want, frankly speaking. The rule is that you can always go back and write transactions back to one prior year for adjustments, and balances will be rolled forward with those adjustments for you. So the time that was very static in a lot of older systems to closing out general ledger is not as static here in the GP system. But I think it does still mean an appropriate timing to getting that done. And most of who we deal with generally think in terms of general ledger and closing it when they've got most of the transactions that they wanted to account for in the year that they're closing in and posted in the system. Now, for those of you that are on a fiscal year, that obviously is a little bit different. And we will be talking a little bit about the differences in this system between fiscal and calendar year closing. Mentioned communicating your intentions to others. That's all a part of the plan here. So I want to focus on that new theory versus old theory. Long ago, when GP was first released, particularly having to do with accounts receivable and accounts payable, the timing of when you close those modules was very critical, mainly because of the summary screens that were holding year-to-date, month-to-date, last year-to-date summary information on your vendors and customers. It meant that if you were closing either a fiscal or calendar, because you are given that opportunity of choosing which one or the other or both to close by. And by choosing those meant that you were actually zeroing out the year-to-date, month-to-date, and moving year-to-date over into and plussing to last year-to-date. And now that theory is not as important as it once was, is that generally what we can do is that we can quite literally omit going through the routines inside of the GP system and not go through the closing that is available for those modules. Now, I say that with some caveat having to do with receivables, and we'll talk about that in a few minutes. But as far as payables is concerned, is that payable accumulates data based on a date, the date of the document. So your 1099s are accumulated based on date of document, date of payment. And the accumulators that go on for each one of the years inside of the 1099 are based on date, unlike what it used to be where you had to close out the year at the right period of time. If it was a calendar year, you had to close out as soon as you could to December 31st, and also consider whatever other invoices that needed to come into the system for that year to be included with that, because again, when you closed out, it zeroed out the month-to-date, year-to-date fields. Accounts receivable is a little bit different, of course, because there's just a few extra measures there, but it pretty much follows the same kind of rule. So that's what I mean by new theory versus old theory. A few other considerations that you need to take into mind as you're going through and planning for the closing process. Service packs. Now, we as an organization have not necessarily said that anytime Microsoft releases a service pack for your version of the software that you must install it. What we have really kind of taken the position is that let's install the service pack if there is something that the service pack is offering to you that might be of some benefit. Now, for payroll users, there's really no choice. Payroll users have to keep up on their service packs, mainly because they're included with those service packs, particularly at the end of the year, include changes to the payroll system. The next thing is smart list. Run a smart list. And what I mean by that is a smart list is a great way of going through and doing some general queries on data. The smart list that I particularly would like for you to run would be on your chart of accounts. And this is particularly important if you're on the cusp of closing your general ledger system. And here's the reason why. The general ledger system looks at the typing of each one of your chart of accounts to determine whether or not it's going to create a balance forward on an account or either close the account out to the designated retained earnings, or if you're a nonprofit organization, a fund balance account. By going back and looking at each one of the accounts in a smart list and looking to see their assignment, whether or not their balance sheet or P&L, will prevent a problem from occurring if you happen to have an account mismatched. What we've dealt with in the past is that when accounts are added throughout the years, oftentimes there is an incorrect selection made on the type of account, balance sheet versus profit and loss. And we know that balance sheets always move their balances forward, and P&L accounts close out to the retained earnings account. A P&L account that is marked as a balance sheet account will be treated in the system like any other balance sheet account if it's mistyped, and it will move its balance forward into the next year, which begins to create some technical issues in the system and a question of what are we going to do to correct this. So the smart list and running this will allow you to prevent some of which could possibly happen and getting it corrected before you actually close out the end of the year. If there's anything here, that would be a real important thing for you to do. Checking the switches is another way of saying that perhaps now is a good time to going back into all the modules that you're using that are going to be closable and looking at the configuration of each one of those modules to make sure all the settings are correct to what you would expect. Particularly if we're looking at general ledger and the configuration on that, is that you want to make sure the right fund balance account or the right retained earnings account has been designated that you're going to close out to. One of the other things is backup. Here's something that you all need to coordinate with your technology department and looking to make sure that before you begin to close is that there are adequate backups being made prior to the closing. And doing this will prevent any problems that could occur by not having a good current backup should you have to reverse what's happened and go back to an earlier period of time prior to your closing if something should turn up that your closing was incorrect. Now, going to a backup and restoring data means going back to that period of time. So whatever data has been entered in subsequent to a backup will be lost. So that's part of the caveat here, but I can't speak enough for backups and doing enough backups along the way while you're performing the closing process. We're oftentimes asked is how much reporting needs to be done out of each one of the modules. And I have to say this, is that in legacy systems that was extremely important because oftentimes reporting was one of those things that you could not extract out of the system in prior periods once the system had been closed. And oh, by the way, there's really no per se month-end closing in this system. Now, there are some month-end procedures that we can perform here, so I want to be sure that everyone is clear that this is primarily, in our conversation today, having to do with year-end closings. So the reporting aspect is truly up to you. What you feel comfortable with, what you believe that you will need prior to closing, and possibly what you will do post-closing and compare to. Payroll is probably not a bad place to do some prior reporting and post-closing reporting afterwards. Not to suggest that there's problems, but there's an awful lot of moving parts inside of payroll, and especially during the closing process. Again, this really comes back to you because all of the reports can be re-reported back in history without worrying that you may not be able to get back to where you wanted to be in terms of report period and compare. Announce your intentions. Again, that's part of what you need to make sure is that you're communicating this closing. GP modules revisited. Again, you need to take in consideration which modules that you believe that are important for you to close. And it goes back to that old theory versus new theory. And I mentioned a little earlier that accounts payable and accounts receivable with some conditions are not something that we think about closing these days, unlike it used to be several years ago or several revisions ago. And then what are we going to do post-closing? So pre-closing procedures, very quick. Service pack consideration. Should I install a service pack? Again, this is something that is really directed primarily towards payroll users, but it can be part of your nomenclature of considerations. Backup. We want to make sure we get a backup. User access. Again, my preference is that when you're doing closing, the preference, if it's possible, to have people out of the system during the closing process. Again, this is something that's documented by Microsoft. This is something that is just part of my nomenclature if I'm working with a client. Reports, and of course that smart list. We're oftentimes asked about whether or not utilities should be run. What about, and I'll start with that last sub-bullet point, data removal. This is a key question that oftentimes gets asked about removing data out of the system. Under legacy systems, and because there was a premium to pay on hard disk drive space as well as processor speeds, and those pricings have gone down. So in other words, processing cost is a lot less than it used to be several years ago, as well as hard disk space. So more of the intentions of why we remove data have kind of begun to diminish with many people. And most of the logic behind that is that I don't have a slow processor. When I find an inquiry something on the system, regardless of how many years of data that I kept, it seems to come up pretty quickly. And then the hard disk question, do I have enough space? Generally, most folks do have enough hard space out there. And this is not much of a consideration of having to drive or buy more hard disk space if you are accumulating data. But can you remove data at this point in time? You certainly can. But again, this goes back to backups and having good backups, just in case you need to go back and re-review some of the data that you might have removed out of the system. But that's found under utilities. And this is not something that I'm going to walk through today of showing how to do data removal, but just understand that it's there. Reconciling. If you have accounts payable, if you have receivables, if you have general ledger, if you have inventory, if you have payroll, and you have a more current version of Great Plains, say from 2010 up through 2015, then reconciling is something that could be part of your consideration. And essentially what reconciling does in each one of those modules is to making sure that the summary balances on each one of the accounts, each one of the vendors, each one of the customers, each one of the employees, and their summary balances are reconciled to their detailed transactions that have occurred throughout the year. Now, when I might want to consider this is there perhaps a balance that's not truly reflective of its detail, might mean that we'll want to reconcile. And reconciling is a procedure that Great Plains performs for you, and it just simply goes out and reestablishes the summary balance based on the detailed transaction total for that period in time that you're reconciling for. Again, something that is required that you do a backup prior to reconciling. But if someone were to say, well, when is really the threshold to reconcile? If you've had several interruptions in the year during a posting routine, or possibly you've had network issues during data entry while using Great Plains, it would be something that I would say it might be worthy of consideration. There's also another selection out there called check links, and this is something that Microsoft emphatically recommended doing prior to doing a year-end closing, and it's definitely something that is still of a consideration when we do an upgrade on a system. The check links essentially goes out to making sure that tables of data are linking together appropriately and there are no rogue or forgotten records out there that have no links. This is something, again, as if you've experienced problems with your data, problems with posting interruptions that have occurred time and time again, or problems that you may have had with your technology connection in your network. Check links may be something that would be worthy of running. Again, this is something that requires a good backup prior to running check links because it can remove data that is not linked. Routines is where you find all of the closings inside of GP. So I'm going to switch out to GP real quick here just to show you, but all of the closings are found under Tools, Routines, and you can see them there as I go down through the menuing here. All right, that's where you're going to find them at. All right, post-closing procedures. After you get done closing, it was a good idea to do another backup. If you have produced reports prior to the closing procedure, you will need to also compare them with post reports that you may want to print out. Smart List, again, I think is an extremely good way of going back and checking data in the system for integrity. Again, it's one of those things that the year-end closing process inside the versions of software that we have these days are pretty good at what they do, and not something that we would normally find expectations of perhaps errors occurring. What I would do is random master record checking and balances. So essentially, master records being defined as chart of accounts, employees if you have payroll, customers and vendors. If you're using inventory, it would be part numbers. So those kind of things. I would go out and just simply do a random check across those records and then look at their balances to make sure that they make sense to you. And that is looking at their summary year-to-date balances. Would be a good place for you just to do some random checking to make sure that you're satisfied that things looked and appeared to what your expectations were from closing. Okay, modules that you do not have to formally close. Here they are: sales order processing, purchase order processing, bank reconciliation, human resources, multi-currency, and project accounting. So if you own any one of those, there's not really a year-end closing that you need to perform across those modules. There might be some considerations of doing your own reporting, doing some inquiries out there, but per se, as we would understand closings of the year, not something that we would think about having to do in those modules. All right, modules to close, and I want to start with that and kind of review those quickly as we go through here. Now, inventory. Now again, my audience out there, I don't know exactly all of what modules that you're currently using, so some of these modules may apply to you, whereas others may not. So here we have inventory. Again, post all the transactions as part of your year-end closing process, reconcile inventory quantities, complete physical counts and make adjustments accordingly, and then close the year and lock down the inventory periods. So essentially what this does is that it transfers all summarized quantity, cost, and sales to what's called an historical summary. So you have the ability on a part number inside of inventory is going back and looking at the history on an item in terms of what's been bought over time, quantities purchased, quantities sold, quantity and dollars sold on each one of those items. Okay, and it is done on a per site basis. So the screen that you're looking at here is indicative of the inventory year-end closing. So you'll see here that you're given some options on the year-end closing process inside of inventory is removing any discontinued items, removing sold lots and their attributes, and sold receipts and cost change history prior to a certain date. That last one on the list for you of inventory users, I'd be careful with that because when the inventory module in terms of how it works, particularly on a FIFO, LIFO basis, is that you buy so many and the system knows how many of those have been sold over time and then begins to look at the next receipt. So what this is essentially saying is that a sold receipt, that is, I bought 5 widgets on February 25th of 2015 and all of them have been sold, would be a completed receipt record, and at this choice or juncture here would allow you to remove that receipt record and would not be part of your inquiry at any point in time in the future. Update item standard cost. This would be particularly for those that might be not using a FIFO, LIFO average costing, but using a strict standard cost, particularly for those folks that are using manufacturing. You can have the system update the standard cost by what was the most current cost of the product that came in. So essentially you'll hit process here. And inventory is not as fussy as maybe some of the other modules have been in the past in terms of when you close, but I would say close this as soon as you can, if you're a calendar year, as close as you can to the 31st, because as transactions come in and out of the system, it can make a difference in terms of the summary totals. If your fiscal year, again, according to your date of when you're closing. So I'm not going to read this line for line, and again, for those of you who want to come back and replay this session today, and maybe you can quickly kind of go down the list, but these are some of the considerations of after closing that you can expect when you close out the inventory module. All right, receivables management. Let's talk about that. All right, so here we're going to be going back to what I said earlier, the old theory versus new theory. And that is that you don't have to close this module out. The traditional closing in this module, if I go back to GP and go to that area where we close out receivables, again, tools, routines, sales, and here we are, and then there is the year-end closing that you see here. This is the area that I'm saying that you don't necessarily need to visit. You can, but this is actually a continued from the first 1993 release of Dynamics GP. They have kept this in place for those people who are still relying on this. So essentially what this is that you can close if you are a calendar year and you're going to close both calendar and fiscal at the same time, you can choose both or all here, or you can choose to close out calendar and make fiscal a different closing period. But essentially, all that is doing by performing this measure is this. And this applies also to vendors. So I'm going to go down to summary. I'll call up a customer, and if you look at this area right here, by that routine closing and inside of accounts receivable, and if I were to perform that measure, this is the data that would be zeroed out right here. And the view that you have here is called amounts since last closed. So this begins to update as new data comes into the system. So it's not exact. In other words, it's not date dependent. It's only when you close, the accumulators get sent back to zero. Anything new coming into the system subsequent to that routine being run will begin to reaccumulate here. Now, to get actual amounts, we actually pull the summary view down, and this is something new that was added in most recent versions, is that I choose a year, I can narrow this down to a period, I hit calculate. Calculate is going to tell me actually what the total sales were for this customer, the cost, and any cash received. All of this is recalculated based on the transactions that it's looking at in the system. Okay? So that's the difference. That's the true difference between the old theory and the new theory. This is not impacted at all by your year-end closing. However, it can be impacted by you removing data out of the system, because it looks at transactional data in order to come up with these figures every time you come back in here and recalculate. So again, this was the only thing that we had back in 1993 in the system. There were not these items here, and we were relegated to having to close out the module. So the question comes down to is, what if we don't close out accounts payable? What if we don't close out accounts receivable? What happens to these numbers? They just continue to accumulate over time. And if I have 5 years that I've gone by and never run the closing for receivables or payables, I will have 5 years worth of data here. So close it if you wish, make it as close in time as you can, but realize this, is that these two selections here are the ones that get you the actual amounts that have occurred in a given year or a period of months within that year for you to look at for summary. So that's what I mean by the traditional closing versus the calendar and the fiscal year. So again, you don't have to close a module, but if you don't, the accumulators still accumulate. Otherwise, you can do your best and try to get it as near as you can to closing, realizing there are transactions that kind of move across years, and at least close it out so it's at least somewhat accurate. All right, so in receivables, you want to, so this is something that you should be doing, is aging your receivable, transferring commissions if you are accounting for commissions, and also accounting for finance charges. Consider the summary information. That's where we were just at and looking at it under receivables. And then you also need to close the tax periods in the system. So if you are assessing tax, so for example, you're using receivables, maybe you're using sales order processing and you're accounting for tax in those sales, you're going to need to make sure you close out those periods inside of the company tax details so that you can have those reset back to zero and the reporting will be accurate. Lock the accounting periods down for AR. So we'll look at the calendar real quick here as we go along. And one of the things that we're often asked is post-closing, what's some of the good things that we should do or consider? So let's look at the fiscal periods out here, and this is what I'm referring to, is that perhaps if I'm closing or I've closed this year, maybe I want to lock these periods down to try to prevent people posting into those periods because we've already gone through and we've closed out the year, or we consider the year to be closed. So this is something that if you aren't doing it, realize this, is that past periods could get posted to, particularly into these other modules. Financial will only allow you to post back to one closed year, but this is something that should be part of your understanding and practice as you try to prevent errors occurring in your system. Okay? That's what I'm talking about here by closing or locking down the periods for AR. Paid transaction removal. This is something for those people who are printing out statements. You want to make sure that that before you print out statements that you don't get past months or a series of months of accounting activity on those statements, and the statements are fairly clean, because the statements print out of what's called the open transaction table and not the history. So when we do a paid transaction removal inside of AR, we're essentially saying move all invoices that have been paid to their entirety and put them into history. Now, the advantage of doing that is that, particularly if you're printing out statements, is that your statements will not be convoluted with a bunch of historical data. So it is something that we do recommend. Your timing of doing transaction removal really is probably driven more about when you print statements out. Now, should you ever never do a transaction removal, is there any kind of problem within the system? Well, if you're not printing out statements, probably not. But you're looking at, in your inquiries, your natural inquiries from the menus inside of GP on a customer, everything is going to look as if it's open. So pay transaction removal, from a clarity's sake, is probably a good thing that we do. There's the screen for closing out the receivable. Again, this is the screen. Choose not to do it. You're fine. But just know this, is that those summary figures will not get zeroed out, and they will keep accumulating. All right? And the process here does not take very long to do. It just simply hit the button, and generally it's a fairly quick process over a matter of a few seconds, generally speaking. All right, there's the tax year-end closing screen that I was mentioning, and that you'll want to close the year and possibly print out a report that will show you the summary totals for the year that you're last closing. Let's talk about payables. So again, this is almost a repeat of receivables, but with some considerations with what payables is responsible for doing in the long run. Is that, again, you don't have to close out the module, but if you do, do it probably in a right timing fashion as best you can. Consider the summary information. But here's something that you don't find in receivables, but it is akin to payables. It's called 1099s. So for those of you who are printing out 1099s and tracking 1099s in the system, the process of closing out in the older versions of the software was absolutely, positively required, because the 1099s were zeroed out once we closed. So we had to print out the 1099s prior to closing. We closed out, the 1099 fields were reset back to zero, ready to reaccumulate. Now in this case is that we're not relegated again to having to close out PO, because when we get in and we print out 1099s, we're asked for the year that we are printing out 1099s for. So the system is tracking year by year of 1099 accumulated totals for each one of your vendors. Now there are ways of going in and modifying those summary totals should there have been a problem with possibly starting a vendor too late with it being designated as a 1099. That is a typical kind of thing that oftentimes happens. So what do you got to do? Short of going back and voiding all of the accumulated transactions and re-inputting once you set the switch for 1099 for that vendor, you can go back in and update 1099 fields in the routines of payables management. I want to close out the sales tax periods. So this only applies if you're accumulating tax and payables. And then, of course, locking down the accounting periods for accounts payable like we did in accounts receivable. There's the payable management closing window. Again, not too terribly different than what you see in receivables. There might be just a few changes between this screen that you're looking at and 2015, but not too terribly different and nothing worth recognizing here. All right, fixed asset closing for those of you who are fixed asset users. You want to depreciate out to year end. The year end closing process will zero out year-to-date fields in the book. So keep that in mind. So you definitely want to do that after you finish your last depreciation for the year that you are attempting close out. And then we must set up the calendar for the next year inside of fixed assets. So here's the asset year-end closing screen. Again, if you have multiple books, you have to make a selection as to which book that you're going to close, because it does zero out accumulated year-to-date totals and resets them back to zero to ready to reaccumulate for depreciation for the next year's depreciation round that you're going to go through. All right, the general ledger closing. Let's talk about this for just a few minutes, because I think this one is probably one of the most important. important ones outside of payroll. Payroll is extremely important because of the communications that have to go on, and not to discount 1099s to vendors, but payroll, there is an awful lot of reconciliation that is done prior to actually printing out W-2s, maybe the 941, but and of course the W-3 that comes out at the end of the year. So one can vie for title as which one is more important than the other, but general ledger is one of those areas that is something that's important to us all, because eventually we have to close general ledger. Now, in this system, you theoretically, and I'm not recommending this, that you theoretically could keep 365 years open inside of the GP system. Now, we've not had anyone who's asked about doing that, but just to show you that some of the flexibility within the system. So what does that really translate into? Could I keep 2 or more years open? Absolutely, you could, but just keep in mind is that when it comes to posting to a prior year, some system allows you to post back to any prior year. In fact, GP, the old GP for DOS used to allow you to do that. But here in the dynamic system, it's only 1 year back that you can post to, and balances roll forward. But when you are closing out a year, and should you keep more than 1 year open, you're always going to close the oldest year first. And that's not by your choice, that is by Great Plains choice. You cannot close out a year where its past year has not been already closed. So the first bullet point there is having to do with smart list your accounts. And this is what I said a little earlier. Honest to goodness, if there's one takeaway that you can get from me today, is do this. Mark this down. Do it for your benefit. People, will sometimes make a mistake or two during data entry, setting up accounts, maybe overlook the appropriate selection. So this is one way for you prior to closing to correct what could be a problematic error for you and occurring when you've got a P&L account that rolls forward its balance, or a balance sheet that closes out to the fund balance account or to the retained earnings account. So look at these accounts, adjust your columns so that you can check each one of your accounts as to whether or not they're a P&L or balance sheet, and do it prior to your closing. Generally, this module is the last in the series of modules to close, but you can close out general ledger anytime you want, regardless of other modules out there. Now, I will say that, again, transactions that are posting from other systems trying to post back into a prior period could get a little challenging. So I think it's probably safe, as just a general rule of thumb, is that it's generally thought about general ledger is the last series of modules to close. Consolidating accounting period balances from detail. So where is that coming from? Let's go back to GP real quick, and I'll show you where this is coming from. And this is something that has come up recently as a question, particularly for those who are trying to search through and figure out what they're going to do for closing when it comes to general ledger. So right there is the year-end closing selection here. But then there is this thing called period consolidation. And should this be something that should be run? It's been hanging around out there. I think for the most part, most of the consultants are not saying something that this is something should be done. But essentially what this does, and this is something that was here in GP all the way back since the onset of GP first being released, is that you could take a period or a series of periods and have the system automatically remove the detail and have it only keep the summary net change balances for each one of the periods in those accounts. So it was a way for eliminating detailed data that folks may not want to look at in an inquiry or care to report out, or it was something that they were really struggling with at the time with hard disk space and wanted to try to reduce the amount of hard disk space that transactions were taking up in general ledger. So therefore, they would choose period consolidation. If you choose to use this, I would again do a backup, choose it, and then go out and look around at the data and see what you wound up with. So if it's something that you feel like maybe you perhaps shouldn't have done, then you can always restore. Now, one of the other things that we're finding very, very popular these days is people wanting to set up sandbox companies. And most of you can set them up and create another company out there, back up your production company and restore it to the sandbox, which it gives you a place where you can do test and play. The only thing that's really going to relegate that would be hard disk space. and it would be something that you'd want to work with your technical department on. But anyway, that's what I was referring to having to do with period consolidation. Let's go back. You'll obviously need to set up a new accounting year. So that is done inside of Tools, Setup, Company, and Fiscal Periods. So you'll need to make sure that you set the fiscal year up or the new calendar year up prior to closing. You want to make sure this is done. And also you want to make sure that the periods have not been locked down prior to closing, because if you've set up a new year and you've locked down the financial periods, it's attempting to try to make transactions in that new year and will not be able to close because you've got those periods locked down. So be sure you come in here, create the year, and particularly if your next step is to close, not to lock down the financial series here. All right, so once you closed, you'll most likely want to lock down the periods in the prior year and only open them up to allow prior year posting when you're aware and an agreement that you should be adjusting entries back in that prior year. All right, prepare and upload next year's budget. So if those of you who are budget orientated, you'll obviously want to set up your next year budget, and if you are using the Excel spreadsheet and import routine built into GP, it makes it nice to getting that budget in instead of having to enter the budgets in account by account like we had to do some time ago. You could always add a new budget year into the system, but it is going to depend upon having that year set up in GP before you can set that budget year up. All right, so here's the GL closing window, and the one thing that where the retained earnings account is coming from automatically once you arrive in this screen is it's coming from your general ledger setup for the module. So this was set some time ago and it's coming forward. Can you change to a different retained earnings account? Yes, you can. But just be aware that when you do close, it will be moving P&L balances to that retained earnings account if you care to do that. The other thing, which is not showing here, but it would be showing in the setup, is that if you are using multiple retained earnings or multiple fund balance accounts and you want to close out to multiple fund balance and multiple retained earnings accounts, you may do so as long as you have a segment in your account number designated as the driver as to which fund balance account or retained earning account that your selected P&L accounts are going to close out to. You're not going to find it in this screen, but it will be in your setup of general ledger. So you want to make sure that that's set appropriately before you actually perform the year-end closing process. The starting journal entry, I'd recommend not trying to override that, even though that window or that part or that field rather is open. It is something that the system is generating for you automatically, and you don't want to have the system try to generate a number that is the same number that of a journal entry that has already been posted, because that can cause some issues of duplicate key index errors. You see that the year that you're closing, and again, you're not going to be able to close out any prior year or any mid-year other than the last year that is still open from the prior year close. I'm not so hot about the removing unused segment numbers or maintaining inactive accounts. It's really a decision here, and what it's trying to help you do is to try to clean up maybe some areas that would otherwise take you a series of steps to try and clear up a few things. Segment numbers is that when we set up numbers or members of segments, we may have added an additional segment that may have never been used throughout the year. So the idea behind removing those segment numbers is something that would automatically take care of for you if there are no transactions that are behind that particular segment combination with the account number. Do you want to maintain inactive accounts? So remember this, is that an active account is something that if there is no data behind it and it has a zero balance, then we could have the system automatically delete that data, or excuse me, delete that account. But an account cannot be arbitrarily removed in the GP system if one has a balance or has any kind of current or historical data behind it. So to remove an account out of the system, even though that it may have a zero balance, you do have to get rid of its historical transactions through data removal. All right, so once we hit close year, this takes generally just a few seconds for some, depending upon the number of transactions that they have entered throughout the system and the number of accounts. Maybe take just a few minutes. But there will be a ruler line that will appear on those people who are using 2013 and above to show you what its progress is. In prior versions, we didn't get that benefit. We just kind of had to wait until the report of the closing printed out, which essentially shows us what P&L accounts have closed out to the retained earnings. But it's pretty silent in terms of what it does. And it moves an awful lot of data around the system that it's very transparent to you to seeing it happen. But essentially, summary balances are getting updated in the system. Transactions for the current year are being moved over to history. And then, of course, balance forwards entries are being created for all balance sheet accounts in the new year. So all of that's really kind of being done for you in the background so that you can prepare and move on to your next set of entries in your new year. So one of the things that you may have to adjust if you're using Management Reporter, and I think most of you are, is that you may need to go back in and adjust some of your columns for the new year, depending upon what you had to adjust for a year that was currently open for your new year and the old year still being open that you still had to report on. All right, customer source, again, I can't emphasize that enough. It is really a wealth of information out there for you, and we certainly love helping you folks when you call in, but you know, sometimes we have to reach out for support ourselves, and we will oftentimes go into the same area that you will be exposed to and seeing to get some answers if you want to exercise customer source doing it. I want to thank you for making Great Plains your product and making Maynard Costerisan your support team to help you out and working with you on the Microsoft Dynamics GP. I do want to say something. I guess I'll just take a couple of minutes here, and I want to go out to routines and payroll for those of you who are payroll users. Because again, I said, which is more important in the closing process, is a payroll or general ledger, and I think I'd probably hear differences of opinion. They're both important, but for those of you who are using payroll, the steps that you need to make sure you go through is making sure that you've got all your payroll in for the year, and then you're going to step through the process of year-end closing, because essentially year-end closing creates what's called a year-end wage file here. That year-end wage file is going to be indicative of where 941, but more importantly is W-2 and W-3 information is going to come from. Although you are going to be given the opportunity, if you do create that year-end wage file, and you do need to do that, it is to being able to, and just a minute here, I'm going to get to that area, is producing the year-end wage report, which is a really important report that shows you how things summed up on the total of your employees per employee as well as for total for the year. This also gives you the ability to go in and edit W-2s. Now, this is only recommended if for some reason, and I'm sorry I don't have anyone here I can show you, but this is recommended if, or a place rather, that you can go and make changes to these areas that would appear on the W-2 if for some reason that something happened during your payroll year that does not reconcile with the numbers that were produced from the year-end closing, and you need to update this in order to get the W-2 corrected. So this is one way of getting that kind of thing done prior to actually going through and printing out your W-2s, which is right here. 1099-Rs, those would be the expense reimbursements to employees. So this is, if you're using that aspect of inside of payroll, this is where those 1099-Rs are and can be modified and printed as well. And there's the W-2 electronic filing and the Form 8027. There is a checklist, and we don't say a lot about it, and I don't know if there's a lot of people that use it, but every module has a checklist that you can select that actually kind of list out for you what responsibilities that you may have, and it's a good way that maybe it kind of checks and balances you as you're going through the routine. So as you select them and it takes you to each one of these screens, it records date and time and the user as to who did it. All right, so that's all. All I really want to say about year-end closing. Well, I hope this was beneficial for you all. And if you do have any other questions, give us a call at our general number, 517-323-7500, and tell them you have a GP question, and you'll be routed. And hopefully that we'll have a consultant available that can take your call. If not, we'll get you into our case, and then we'll get you called back as soon as possible. So I really appreciate you all attending.